To this special broadcast live here on Money Control. The show's called Earnings Express with me, Stacey Pereira. And today we are here to dissect the slew of bank earnings that came over the weekend. We saw ICICI Bank, Kotak Mahindra Bank, Yes Bank, IDBI. A lot of them that put out their numbers, and what we could say at the surface level is they're pretty steady numbers in line. Most of them also beating estimates. If you look at ICICI, it delivered quite a strong bit of numbers. Asset quality has improved, coming in at a 9-year high, whereas the asset quality has improved so much to come to that. You're also seeing the loan growth and deposit growth both coming at multi-year highs for ICICI Bank. At the same time, if you look at Kotak Mahindra, that one too is seeing a good set of numbers. If you look at it from the top of it, the profit has risen by about 24%. Asset quality also remains quite stable. But the big news point for Kotak is the fact that it has got a new MD and CEO in Ashok Vaswani. We'll be talking about that and how that has come about and why RBI wanted somebody external to be looking at Kotak Mahindra Bank. Of course, there was also RBL, Yes Bank, like I pointed out, all of them putting in their numbers. From the NBFC side, we saw Paytm put out its numbers. So let's do some bit of number crunching. And joining me to do that is Manish Suvarna from our banking team. Thanks so much, Manish, for joining us. We also have, to give us an overall perspective on what the streets are looking at, we have Akhil Bhardwaj, a senior partner at Alpha Capital, joining us to take us through these numbers. But first, let me go to Manish. Manish, let's take each of these banks. Let's look at ICICI first. The street right now is giving it quite a bit of thumbs up, we can say, in terms of what we're looking at surface level numbers. Good set of numbers, we would say. Asset quality has improved. Even the top line, bottom line, both of them coming in good. Give us just a lowdown on how you're reading ICICI Bank at this point.
So basically, I will not talk only about the ICICI Bank, but the Kotak or the Yes Bank and the IDBI Bank. We have seen the good numbers they have come up with in this quarter. So basically, these numbers could be attributed to the improvement in the asset quality as well as the net interest income. Right. They have seen the very good improvement. Even after the improvement in the net interest income, some of them have seen the compression in their margins. But that is the other part of the story. But still, these banks have reported a good numbers on the NII as well as the asset quality.
Right. So when it comes to banking stocks, of course we look at NII as they are, when we otherwise look at revenue or sales. But for banks, we've been seeing a good robust number for some time. We've seen growth in credit in general. If you look at India and how that credit growth scene has worked out, at least in the last few quarters. So give us some input on that side on how these banks going forward are looking at credit growth especially.
So see, when the COVID pandemic hit, there was a very shrink in the means the credit growth, and after that, because of the low base, we have seen the growth in the credit growth in the last few quarters. And going ahead also, we can see some of the stability in the growth, because the previous numbers were high, the base numbers were high. So yes, so there could be some stability in the credit growth going forward. That's what we can expect from these banks.
Right. Let me bring in Akhil once again to tell us a little bit more on these stocks. How is the street really looking at all of these numbers, Akhil, at this point? We are seeing Kotak probably not so doing not so well in trade today, especially after that announcement of its new MD and CEO who's going to take over. But we'll get into those details in a bit. First, tell us your likely assessment of the numbers that you're seeing for Q2 for all of these banking names.
See, the ICICI Bank profit has come really well. The profit jump of nearly 36%, which is a profit of nearly 10,261 crores, is very nice. In fact, the last year this growth, this numbers was only 7,500 crore. So it's a jump of 36%. And the major contributor of every banking is the net interest income, which is the loan the interest which they are earning and the interest which they are making. So on that, there is a jump of nearly 18,000 crores of income which has come into the banking. And these banks like Kotak, ICICI Bank, they are heavy index funds. So their earnings are really important for the overall Sensex and overall index to run up. So their profitability, Kotak has also jumped its profitability by 24%. So the net profit which has come is nearly 3,191 crore. which last year was only 2,500 crore. So which is, and here also the net contributor, the big contributor is net interest income, which has come of nearly 6,000 crores in the Kotak Bank. And also these banks quality is also increasing because their NPA has declined. If we compare it with on the yearly basis or in the quarterly basis, the ICICI NPA presently is 0.43%. And a year ago it was 0.6, and last quarter it was 0.48. So the quality is increasing and the profitability is increasing, and they are heavy index funds, they are heavy index scripts. So that's why it's very important that banking sector should keep doing good, and it is good for the overall index and overall market. And the big reason why it has taken place is because the credit offtake has also taken place. Although when the interest rates were rising, the net interest margin has declined, but because the loan book, overall banking loan book has moved up by 19%, which is very nice. That's why these bankings are showing a very good profitability. And I feel that in the coming few months also, there'll be a good jump into the consumer spending because there's a festive season. So I feel that now the banking should start making good return, and the stock prices will also reflect the profitability.
Right. Well, Akhil, we'll come back to you to discuss further on each of those points. But first, let me go back to Manish and ask him about asset quality. This is something that we've been consistently saying has worked well for most banks. It's done well. Give us a sense of what it is likely going ahead. Are they write-offs? The provisioning is also come down quite a bit for most of these banks. So, is it so that there aren't that many NPAs, or we're not, identifying them at the right time? What is it that's actually getting this number better, or how have banks managed to really clean up their books when it comes to NPAs?
But I think we cannot, Stacey, we cannot predict that what could be the NPAs, because as we have seen, the RBI has already flagged personal loan segment, and in the Yes Bank earnings call, the management has said that the 2/3 of their slippages have come from the retail segment. So that could be possibility that the other banks could also see the similar scenario in their books going ahead. So I think we cannot predict that how it will be. But yes, some of the analysts what we speak to whenever we write the stories, so they say that yes, the asset quality is going to be great because we have the base number is very big. Right. So considering that will be I think stable numbers going ahead. Right. But still we cannot predict.
So like we are talking about the unsecured loans, that's the point of contention. It's been brought up by RBI as well. We've been seeing that number increase steadily for most of these banks, be it ICICI or even Kotak Mahindra, all of them seeing that unsecured loan number increasing, and there's nobody really taking any step to bring that down, or no cautionary, except for the RBI saying this, nobody is really taking any major steps to be changing that. So what is the cause of it maybe, and how is it going to be remedied by the banks?
No, it is not like they are not taking very cautious step while giving loans into this segment. Whenever they disburse the loan, they have lot of criterias to look after it, the risk assessment they do, the lot of things they do, the banks do whenever they give loans. So even though we have seen such a growth in this segment, but these banks are not seeing any harm in growing in this segment because they are getting good returns out of this, and the consumer base in this segment, the retail segment, is very good. That's why they must be going into that, even though RBI has flagged. So that could be the reason.
Right. Let's also ask Akhil what he thinks, whether it could be a major concern, the fact that we are seeing so many banks not really flagging off but showing this increase in their unsecured loans. So could that be some bit of worry when you're looking at also these stocks for these banks?
There is any cause of concern because of unsecured loans, because the other thing is that these personal loans and the credit loans, they are biggest contributor to the profit margin of every of the bank, because they entail the higher interest rates. So it is always a case of bank that the unsecured loan is high, but what happened is that because their profitability, their contribution is high, so this delinquency will keep happening into the unsecured loans, but that should not be a cause of concern.
Right. Akhil, let's also get your view on Kotak getting a new MD and CEO. Yes, it was in the works and everyone was looking forward, mostly thinking that there would be somebody internally who would be getting that promotion, but seems like RBI had a different view and wanted somebody from outside, and they've chosen Ashok Vaswani, and he has a good credible CV to go by. He's worked at Barclays, he's worked at Citibank, so what really is he going to be bringing to the table, and how will that really change much for Kotak? If you could give us your view on that.
I think that when any CEO is getting changed, it's just a knee-jerk effect. The market remain resistant for some time, but as and when we see that the new CEO is bringing new differences into the companies and new strategies getting implemented into the overall banking system, then it start recovering. And because Mr. Vaswani has a huge experience working into the multinational banks abroad and in India as well, so they will bring a very good strategies to the table, and it will help Kotak Bank to grow further.
So hi Akhil, so do you think that there will be any challenges for the new MD and CEO, because the Kotak culture is very different what we have seen in the last so many years since Kotak was there into the system. So how you see what could be the challenges for the new CEO, because there are a lot of other senior people are there who are also eligible for this post.
See, what happens that when the new CA has come into the system, so his strategies will be definitely different than the earlier CEOs, but it will also bring something which was not there into the Kotak work of things. And when those new strategies will get implemented, it will only benefit Kotak Bank in that regard. And I feel that the Kotak earlier was running into a very standard form, because the CEO was there for the long term, and the newness into the organization was not getting implemented, which I think Mr. Vaswani will bring into the system. So I don't feel that there will be any struggle or any problem into the ongoing times.
So as I mentioned that so many other people were also there who are eligible for this post. So can we expect any of these people exiting the bank?
I don't feel that would take place, and if that would take place, that will only take place for the better of the bank, because then it has to be a team which need to be get built up. So if any of the senior people feel that there is a difference with the new CEO entering into the system, then he goes for the good. So but the team which Mr. Vaswani will form for the further growth of a Kotak, I'm sure that it will be robust and the Kotak Bank will keep doing good.
Right. Akhil, do stay on with us. Let me go back to Manish and ask him what he really is thinking of when it comes to the overall picture. We're seeing RBI be quite, in that wait and watch mode. It is following cues of what it's seeing from the Fed. We have Fed which will be putting out its policy at the end of this month, and most often we've seen there is that dominoes effect that we see from there happen here as well. But our situations are very different. The banking sector, what is happening in the US is very different from what we are seeing in Indian banks. So is there that correlation? Is it, actually worth making? And especially when it comes to these stocks, is it really worth making when you're looking at US banks versus Indian banks?
See, firstly, if we talk about the US Fed and the RBI, so RBI is actually means both the banks, both the central banks are looking at the inflation, because the US have the highest numbers in terms of inflation, whereas India have comparatively stable inflation, even though it is breaching the RBI's upper tolerance band of 6%, and RBI wants it to bring down to the medium term target of 4%. But still, we do not see any concerns, except there are few like fuel prices, vegetable prices, what we have seen. Now there is a concern of fuel prices. But that concern is not going to last for too long. So it will go down. So that is why must have RBI has chosen to hold back the rates for last four policies, and even though the US Fed has increased their interest rates.
Right. Akhil, maybe you can give us your perspective on how we're seeing this wait and watch game, but what it really means for the stocks, because normally you see people, whenever there's a rate hike or that anticipation of a hike, we see banking and financial stocks really take a beating. So are we done with that cycle, or do you think it's peaked, like how we've been talking about for the Fed, and is that really impacting the stocks back home, at least our banking stocks?
See, as far as US market is concerned, there when the interest rates are rising, it's a very different scenario for them because they have never seen the interest rate rising so back to back. So that's why it's a cause of concern for them. For India, this kind of a inflation is a normal being. They have been that earlier also when the inflation is high, so the interest rate has moved up. So banking has seen that cycle. Indian banks have seen that cycle earlier also. So I don't feel that there'll be much impact on the banking growth because it will only have a short-term growth, but in the long term, it will stabilize. And also the US cannot keep the interest rate long for the long tenure. So when the interest rate there will start declining, in India also the interest rate will start coming down and it will then benefit the banks.
Right.
So Akhil, when can we expect the rate cut by the RBI in India? Means there is a possibility that they will do in the first quarter of the next financial year. But according to you, what do you think that when they will start cutting the rates? And definitely it will going to help so many means the borrowers, because they are now facing the higher interest rates while borrowing.
Yeah, exactly. But it is more dependent on the international, on the Fed rate. So our dependence on the Fed rate is really high. We can't reduce the interest rate until and unless the US interest rates start falling. Because if that happens, the difference will be higher and a lot of money will start flowing to the US market, which will suppress our rupee and further increase the dollar. So I feel that in the 1 year time horizon, when the Fed will not be able to afford such high interest rate because it is dampening their economy. So in US, when the interest rate in 1 year will start declining, in India also we will see that the interest rate coming down.
Right. I want to get to one more fact on Paytm's earnings that we saw on Friday. Yes, we are talking about banks, but let's also move a little aside and look at financials, and Paytm being one of those big ones from there. So let me get Akhil's view firstly on this. We are seeing a good improvement. They are on that path to profitability as they've promised. We are seeing the losses come down to 290 crores versus the 571 crores. Revenues also seeing a 32% jump. So in the NBFC space, we saw when Bajaj Finance came out with the earnings, well, it did get a beating initially. At least the street's not really too happy for whatever reason so be. But Paytm now trying to tread that path, saying that we are on the right path. So Akhil, how would you look at Paytm, and in the NBFC space, what could be the concerns?
So in the Paytm, the losses are narrowing definitely, which you have already mentioned. And last year, which was 571 crore of loss, it is now only 290 crores of loss. So they are on the path of recovery. But as far as stock is concerned, usually what happens that there is a thought process which get built up across a particular script. So the stock which was listed at 2,200 rupees came down because it was overvaluedly overlisted. And when it came down to nearly 700, it will take some time for it to come back to nearly 2,000 rupees per share. So that thought process has built towards Paytm that stock is not that great, and one would not want to make investment where the recent return has gone bad into the particular stocks.
Right. Akhil, also maybe I'll get an overall view from you, your final word, if you have to give a thumbs up or thumbs down to the banking sector, at least the private bank earnings that we've seen so far. What would be your final verdict, or what would be the cautionary point that people need to be looking out for when it comes to banks?
So bank is a very important sector because bank has the highest allocation into our indexes. So their earning is directly proportional to our companies, our stocks, and our index giving good return. And we feel that there's a huge scope for a banking to grow in the rural areas and in the Indian also, in the Indian market also, the conversion of cash market to the white market. So that will keep on making banking sector as a very lucrative sector for one to make investment into. In fact, if you talk about any fund manager, all fund manager has a maximum allocation into the banking sector only because there is a huge growth for a banking sector to grow.
Right. Well, Manish, one point that we did miss out on was the margin factor when it comes to all of these banks. Well, Kotak and ICICI have seen some bit of improvement. Yes Bank not seeing that improvement at this point. So, what is that, thorn you could really say that is keeping margins still at this squeezed at this point?
Even though these banks, the ICICI and Kotak have seen the improvement in the margins, and the Yes Bank have not seen much improvement. They have seen the margins compression by 30 basis point. But in the earnings call, the MD and the CEO of the Yes Bank said that they could see the 20 basis point expansion in their margins by the year end. So I think this would be good for the bank and it will help their profitability. But I want to ask Akhil, what do you think about the margins of this bank and how it is going to impact the stock prices if these margins grow substantially in the next 2 quarters, considering the higher interest rates in the market?
So the cost of fund has moved up, and due to that the net interest income of Yes Bank has declined by 3.3%, which was earlier high. But if you talk about NPAs, their NPAs are improving only. So when the provisioning of from the private lender, the provisioning will curtail. Thereafter, you will see that the net interest income of Yes Bank also moving up. And the profitability, the real profitability, although the profitability of Yes Bank shows for 50% growth, because last year was very bad and it is relatively, but the net interest income also will start rising when you see the provisioning curtail from the private lenders.
Right. Well, seems like we've given an all-round perspective, at least to all the bank earnings that we've seen over the weekend. All of them coming in line, beating estimates on some counts. But what we have to look forward to now, that was all the private banks. We do have the big PSU banks also that are waiting, and that will give us an overall picture of how the banking sector and the financials are really doing for the economy, and also those particular stocks and how they are moving the markets here in India. Well, let me thank both my guests. Manish, thank you so much for giving us your time, and Mr. Akhil Bhardwaj as well. Thank you so much for giving us the perspective on how we should be looking at banking stocks as well as these earnings that have come out. For all our viewers who've tuned in, thanks so much for watching.